you think how the elections are going to go? Well, not the elections, it's gone already.
Well, the governance, I don't know. I think they'll have to probably go with a DA to have a stable employment
I think
strategy.
I think it's more about the way they're looking at it. The ANC going, how can we survive the next 4 years?
Probably.
Because they're looking at but they're damned if they do and they're damned if they don't. Because
they don't. If they go to left.
They go left, and the people who is in the ANC who wants to go right, then they will shout at them, and vice versa. So
they're going to put if they go left, they're going to put the wrong people into positions that shouldn't be there.
Yeah,
so I think they'll probably go to the DA and get more favorable results, job creation, investment. Yes. I don't know.
And then you get the MK jumping up and down.
Oh my goodness.
Yeah. Anyway. Oh, great. Well, last time we spoke about the assets and liabilities. In respect to the balance sheet. Delving down to that. Into the detail of the balance sheet, and with the balance sheet being part of the annual financial statements, we have another statement, one in our balance sheet. So not our balance sheet, in our annual financial statements, called the income statement.
Yes, the income statement, or how they refer to it these days, is the statement of profit and loss.
Okay.
It's and even the balance sheet is now called the statement of financial position.
Yeah, that would make sense. A statement of financial position. Yes. Okay.
And but yes, the income statement, as everybody actually knows it.
Yeah. Okay. But I think the terminology used, the statement of profit and loss,
financial performance, or profit and loss, somewhere there.
And what does that statement basically give us in the annual financial statements?
Well, in a set of annual financial statements, your income statement will reflect your company's turnover for the year. That'll be all your income that you've earned on your mainstream business. It'll have the cost of sales regarding your mainstream income.
Mm-hmm.
And then it'll be divided into other income streams. You might have other stuff that's not your main source of income, and operating expenses.
Okay.
That'll be listed separately. A normal set of annual financial statements as a small or a shortened version that doesn't show all the detail of all the categorized expenses. That usually, they call it a detailed income statement. They put it at the back so that the receiver can have a look with a tax calculation of what you've spent your money on.
What you spent, so where they can catch you out.
The difference between what's deductible and what's not deductible.
Yes. Okay.
And so on. But the main body of the income statement is to show what's your turnover. Your turnover, what's the correct word for it? Decides on where you fit in a lot of reporting requirements on a lot of, if you're more than $1 million, you have to be VAT registered. If you're more than 50 million, you're not considered to be a small business corporation anymore. There's a lot of things that the turnover then dictates.
Okay.
Cost of sales gives you a deduction on turnover and gives you a gross profit margin to see if your markups, where's your markup on your products or your services. Other income is usually either investment income or small stuff that's not part of the mainstream. And then you've got operating expenses where your salaries, your rent, your advertising falls into. You get a net income line item that basically says, okay, this is more or less what you've got left. Everything has been deducted. Usually SARS is very interested in looking at what's your net income. position, and then there's a tax line item, and then it's a net profit, and that net profit is what is going to the owners
Yeah.
or going to the retained
Goes to the
ends.
balance sheet.
And that goes to the balance
Balance
sheet
sheet.
to say, this is what you haven't given out,
Yes.
and you might be able to give this to your owners via dividend or
Yeah.
normal capital drawings.
Hmm. So in my mind, when it's one of the more easiest statements to read in the annual financial statements, and I'll tell you why. Because like I think you mentioned last time, when we spoke about the balance sheet, they tend to always page to the last page just to read how much they owe the tax man.
That's correct, yeah.
Because that's an easy line items to read, because in our lives, in life, we get our salary, which is our income, and then we got our expenses. And whatever is down at the bottom is what is left.
Yeah.
And it's exactly the same. When you talk to a plumber or to a businessman, they can understand, well, most of them can understand a budget. And this tends to align yourself to the budget, because when you do your budget, you got your income, your cost of sales, your expenses, your bottom line on a month-to-month basis.
Correct.
And that's just, if I understand it correctly, is just the accumulated amounts for the year that talks to the income statement.
That's correct.
This is how much you earned.
Yeah.
This is how much you spent. This is how much profit you made.
And it's categorized according to what you know in your business. You know what's fuel expenses or salaries, or you have to pay rent or repairs and maintenance. You know what it is, and you can have a look and see. Oh yeah, I remember. We had a bunch of breakdowns. That's why repairs and maintenance is high compared to the prior year, because you've got a comparative figure. It's easy.
Yes.
Oh, we had a good year. Our turnover is up. We had a nice big project.
Because you understand your business.
You understand it and you see it, and the income statement is easy to justify what happened over the last 12 months period.
Yes.
There's also a difference between the balance sheet is dated on a specific date.
Yes.
The end of the financial year usually, but your income statement is for a period of 12 months usually.
That's right.
Yeah. So it'll always say for the period ended, and your balance sheet will state as at.
Yeah. I didn't know that. Oh, thanks. That's something new that I didn't read that finer detail. Yeah. I knew the philosophy behind it, but I didn't.
But
the wording.
It says it. Yeah.
Yeah. So and what? So on the expense, the income statement, none of that really gets taken to the balance sheet, other than the net profit, not the net profit. Yeah, the net profit.
The profit after tax. Yes.
The tax, because that then becomes an asset. Everything else was an income less expenses, and whatever that theoretically is an asset.
Well, it becomes owner's equity.
Owner's equity. Sorry, owner's equity.
Owner's equity.
I apologize. Owner's equity. In the same token, as if there's a net loss, it goes
reduces
to
owner's equity.
It reduces owner. That's why you said it goes to retained income that is owed to the owner.
The owner
as a liability on the balance sheet. Yeah. And you mentioned early on, so the income the income statement is made up your income, your cost of goods sold, and your expenses, and then you get your net profit, right?
Correct.
Just get a little bit more detail of exactly what cost of goods sold are.
Your cost of goods sold or your cost of sales will be all costs that you incur that you need to do to justify your turnover as such.
Yeah.
So if you are a buy and sell company, you will buy an item and you're going to sell it. So you first have to buy the item that you want to sell. It's got a cost to it, and that'll go into the cost of sale portion.
Okay.
But you might have to transport it up from wherever. You might have to have labor to put it into a state where it can be sold. what else can they? There's a bunch of
Yeah.
expenses that you can put in that's directly attributable to the fact that you have to sell that item.
Okay.
But somebody will say, "Oh, but I have to advertise for it." But no, you don't necessarily need to advertise for it. So advertising won't be probably won't be directly related to cost of sale.
Yeah.
It'll be a wider
Yeah, it falls
base.
into a wider category.
Yeah. If you have 100 products you sell, but you only advertise one, you're not going to put advertising into cost of sales for only that specific item. You're going to put it in for your whole business as a whole, or for salaries.
Yeah.
But you can also have salaries that is justified as cost of sales because it's directly attributable to the item being sold. If you manufacture products, that labor component goes into cost of sales because they
Yes.
have to make it.
Mm-hmm.
But the people sitting in the admin office have got nothing to do with the.
Correct. Yeah.
With it. They'll have an operating. That's your operating expense. They'll
Yeah.
have a line item at the bottom.
So if I understand it, so if I had to put it into my layman terms, is that if I had and let's use salaries as an example, if I had no business coming in for the month, I will still have to pay salaries.
Yes, that's correct.
However, if there is business coming in, there is a portion of that I had to buy the copper pipe, right? Then I do my markup on that copper pipe, but that the price of that copper pipe is a cost of goods sold, because if I didn't have work, I didn't have to buy the copper pipe, but I still have to pay salaries.
That's correct.
And therefore it becomes a cost of sale from that point of view.
Yeah.
And for me in any business, one can debate it, is that if you can try and get as much of your business as a cost of sale item and not having an operating expense, it's a great business.
An operating expense is an unavoidable expense that you have to incur whether you make turnover or not.
Correct.
Basically.
It's the nightmare of a business owner.
To make sure
that his cash equals to
that is anything that's on contract, rent.
Yes.
You have to employ people. You can't just not pay them for a month. It doesn't work like that.
Yeah, unless you get them as a cost of sale.
As a cost of sale on a contract basis, or something that's directly linked to production or sales.
Yeah.
And you don't have any legal requirement to otherwise incur that cost.
Correct, 100%. And that's operating expense. Exactly what the word says. It says it's an expense that you have to incur to undertake your operation, irrespective if you've got work coming in or not.
Yes.
But when you got work coming in, you tend to have a cost of sale on that specific thing. So like a typical, again, let's go down to a very simplistic, I get a contract. They're doing a installation at a hospital. My tender price will be made up of the material that I purchased. However, I work up my markup and things from that point of view. Let's say my material is 50,000, 50 million, whatever you want to do it, and my markup comes to 50,000. Then my tender price is 100,000.
Yes.
Therefore, my income is 100,000. But when I do the breakdown, let's say the project finished within the financial year, 50,000 would sit on a cost of sale, and 50,000 would be sitting in an operating expense after you've done the equation. Very basic.
If you want to end up on a zero balance, basically.
Correct, 100%. And if the contract doesn't accrue and I lose that tender, and the tender was 100,000. I'm not going to get 50,000 on my cost of sale, but I'm going to have a 50,000 expense if it is like that, because depending on how you brought, if you got staff and salary. But
you can see what happened during the COVID period. All the businesses that had expenses that kept on running, irrespective of whether or not they traded, was operating expenses probably.
Yes. Yeah, that's
right. It was unavoidable costs. And
Yes.
For that reason, a lot of businesses closed down.
Correct, because they didn't
They
have
couldn't
owner's
avoid
equity.
it, and they couldn't mitigate it
Mm.
in any way.
Yeah, 100%. So after we've got our income, cost of sales, we got this thing called net profit. What's the difference between a net profit and a gross profit?
Your net profit is your profit that your company earns for the year after all deductions and expenses have been accounted for. Your gross profit only takes into account your turnover for your company,
Sorry,
less your cost of sales to generate that turnover.
Mm-hmm.
And that'll inadvertently give you your markup or your gross profit percentage.
Yes. And that goes back to those equations that you spoke about earlier on, where you determine what your net profit over your turnover is versus your gross profit, et cetera, from that point of view.
And it's used for budgeting purposes to say, well, I'm going to sell at a markup of 25. I'll probably have a gross profit of, say, 20. Will the 20% gross profit be enough to cover all my operating expenses? So that's a budgeting tool. That's management accounts that you have to put in place, accounting wise to see where must I be, where's my break even for the year. If you know what your fixed costs, you can work it back to see what do I need to do in this year to survive.
Mm-hmm. Yeah. Last year to this year.
Yeah, to this year, or planning forward, or
100%,
or so on. But yeah, there's formulas and processes that shows you that.
Yeah, and then just going back to the net profit. Obviously, the net profit is great, but then you got to go and pay the tax man.
That's correct.
Right. So it's net before tax and net after tax, if I understand that specific thing. Yeah. And that's what, like you said, we mentioned earlier, is that the guy will always go back to, he doesn't give a continental route about the rest.
Yeah.
He always goes back to the last page because he wants to see on the net profit, what's it, 28% at the moment?
No, it's 27% currently. It was 28%. Okay. It changed. So all from March 23, all year ends after March 23 is on 27% now.
Okay.
28% was before then.
So again, the income less your expenses, 100,000. Let's make 200,000.
Oh, that's not for company taxes.
No, 100%. Yeah, obviously, just talking from. I'll just talk from a company point of view. So 200,000 rand turnover, 180,000 rand expenses, including cost of sales, gives you a 20,000 rand net profit. And then that's the figure that the taxman wants his little cut of the slice of the pie, basically.
In layman's terms, that'll be how it works.
And if it's 27%, what is that? 52 rand. Sorry, 5,200 on a 20,000 rand net profit. That gets deducted, and then that figure then goes to the balance sheet as an owner's equity.
Yeah.
And then and let's not confuse the things, but then on the owner's equity side, if you declare a dividend, then you pay another tax.
Another 20% withholding tax,
Because generally what you use that money for is to try and gear your company again. Instead of taking it out and saying, well, now I want to take it at a profit, I'll use retained incomes as to use and move it into the asset line.
Yeah, otherwise everybody will have a company to put their income through. And say, well, 27% is great. On personal tax, I have to pay 45. So 20%, wow, let's just do it. So I said, no. If you take your money out, you have to fork out another 20%.
Yeah, they're clever. They're clever in that one. So it's 27. But if you take it out as a salary, which reduces your net income, then you get hit for income tax. Which the net effect, if you really do it, there's maybe a 1 or 2% somewhere in there.
You'll have to work on the closest marginal effect between either personal tax or company tax to balance it out. If you have a really great company that does wonderful and you earn top dollar, you're going to pay a lot of personal income tax. Your company is going to have to pay company's tax, and if you want that money to be to spend it on yourself, the dividends tax is unavoidable.
Yeah, but these are the tricks that these tricks are the ones that you have to
You plan for it.
Plan for it, but the point I'm trying to get in my mind is that if you don't understand your balance sheet or you don't understand your annual financial statements, it's pointless then. You've got to fully understand the picture of your business. Once you understand your picture of your business, then you can start making these decisions as what is best, for the business.
How to structure your business as such,
100%.
To get the best economical outcome, tax-wise, structure-wise.
Yeah, and that's why you said the financial literacy is important, even on a basic thing, because once you understand it, it's like RAs. Where do you put your money?
Yes,
in an RA? You can get a personal tax deduction, but you're kicking the ball down the road. What does it look? All that type of
all
things.
that stuff. Yeah.
And it's exactly the same.
You get your appropriate advice from who can give it to you, to see
anyway,
where it falls in.
Thanks again. Appreciate it.
Pleasure.
Maybe next time we'll delve a little bit into the one that I always get so confused against is the cash statement.
The cash flow statement.
Well, not the cash flow statement. The
cash statement.
That's a conversation. The livelihood of everybody is this cash. Cash is king.
Where does the cash go to?
Yes, 100%. Well, thanks again.
No, pleasure.
I hope you enjoy the rest of your day.
Thank you very much.
Thank you.
Thanks.
Bye.